Hey guys, welcome back. We're starting another video this week, and this is the trading series we're continuing with. And this week we're going to be talking about support and resistance levels. These are really important to traders and investors of all kinds, and they're the key to being successful in both of these industries. So I hope we can learn a little bit, and I'll see you all next week. Hello everybody and welcome back to another lecture. Today we're looking at support and resistance levels, and this is to utilize in your trading. So welcome. And this week's lecture, as I mentioned, focuses on the idea of support and resistance levels and how we can utilize these for your day trading, swing trading, and investing purposes. So one of the most common technical analysis techniques utilized by traders is that of simple support and resistance levels, as so they're called. And we'll take a look at this. So although many people rely on indicators, they're simply relaying information that price and volume already show, but they show this in a slightly different way. Support and resistance is easy to learn, effective, and does not rely on any indicators, just price action. So support level is a price area that is held in the past, and when price falls to this level, it has bounced higher and touched this level multiple times. Typically, the more touches, the more reliable the support level is. And we'll take a look at some examples later in the video. Now, resistance is the opposite of support. It is a level above the current price that has held the price level from heading higher in the past. It's reached this level and bounced and headed lower again. Again, the more touches of this level, the more reliable it is in the big picture. If a support level or resistance level is broken through, which is called a breakout if above a resistance level, or a breakdown below a support level, the move is usually very fast with a high level of momentum. Traders often draw support and resistance lines on higher time frame charts in order to outline where bounces may occur intraday if they're trading intraday, or intra-week if they're trading as swing traders. Support and resistance levels can be pre-existing in that they've been established and likely will continue to hold. And it can form what's called a channel, which is when price consistently trades in between a support and a resistance level. It can also be a presumptive support or resistance level, which are areas above all-time highs or below all-time lows in areas where price has never traded before. And this is usually for new highs and lows, and traders utilize various tools such as Fibonacci extensions or retracements, but also psychologically challenging price levels, such as half or whole numbers. We'll also take a look at how to draw some support and resistance levels. It's worth mentioning that a single line or level can act as both a support and a resistance level. Typically, when a support is broken, it then becomes resistance when price returns from below it. Resistance turns into support once it is broken above and returns after falling back to this price level. This is often referred to as the floor becomes the ceiling, and the ceiling becomes the floor in trading. So from an economics perspective, we can also take a look at what support and resistance levels are. So essentially, it's the areas where the opposite side tries to take control. For support levels, the stock sells off until buyers step up in the same area, trying to gain control. For resistance levels, the opposite happens. The stock rallies until sellers step up in the same area over and over again and try to gain control. If the other side wins this battle or tug of war, a breakout or a breakdown occurs, and we can see this pretty visibly on any chart. It's also worth noting that support and resistance is valid on any chart time frame and any candle duration. There's also secondary support and resistance levels, and they form when a trending stock, up or down, forms higher highs or lower highs, and these peaks form resistance or support levels on the way up or down the chart. These are less significant due to them only testing one level. So now let's take a look at some examples. So for our first example, we're going to take a look at a strict resistance level. Now I've chosen one here on RH, and you can see 1, 2, 3, 4, 5, 6, 7 different points that it touches, and I've drawn the line straight through here. Now we can see when I draw this line through here, I'm not doing it exactly where all the peaks match because this is often unrealistic, but it's an area where I've drawn this line through. So you want to remember that it's an area where resistance levels and support levels matter. So for the next one, we're going to look at a strict support level. And this is the floor, as you might remember. So here I've chosen one with 1, 2, 3 different areas. And again, I've drawn this roughly in the center so it touches all of the different support levels. And again, it's a general area that we want to watch out for here. And the third example, we're going to take a look at a support level that's also a resistance level. This means it can be both at the same time. So in this example here on American Airlines, we can see that we have a support level here at the bottom. And we'll actually take a look at just a resistance level here up above, so you can see there can be multiple on a chart. And at the bottom here, we see one that was support, it broke through it, and then became resistance. And for our last example, we're going to take a look at a secondary resistance and support level. And here it's going to be resistance and support levels. So you can see it's trending upwards, this stock in NVIDIA. And here I've drawn the resistance levels in blue. And I'm going to draw support levels in pink. So you can see as we move up here, we get small support levels and small resistance levels. And every time we breach another resistance level, we form a new support and break through the resistance, form a new resistance, break through that, and then make another support. So this happens all the way up, and it's usually a good way to get into a position if you haven't already. So now that we've seen some examples, you should definitely try this yourself. Try printing off some charts or using some charting software to get familiar with doing this. And remember, support and resistance are general areas, not definite price levels. Using a skinny rectangle to represent the levels is also a good idea to relay this idea. So I'll show you an example of that and what I mean. So using this same photo, we can map out this resistance levels by drawing a little rectangle. That gives us a better idea of where that resistance is.